Investing at its core is about planting seeds of capital and watching them grow into a fruitful financial future. While domestic markets offer a comfortable starting point, the truly adventurous investor understands that diversification is key. This is where the allure of international investments comes into play. Venturing beyond one's own borders opens a world of opportunities, emerging markets brimming with potential, established economies offering stability, and everything in between. But like any intrepid explorer, the savvy investor must first equip themselves with the knowledge to navigate this exciting, albeit complex, terrain. This is not about recklessly chasing the highest returns, but about understanding the nuances of different markets, assessing their risks, and aligning them with one's own financial goals. It's about embracing a global perspective, recognizing that economic growth is no longer confined to a handful of nations. So let's embark on this journey together, exploring the factors that contribute to a country's investment appeal and uncovering some of the most promising destinations for your hard-earned capital. Remember, the world is a vast and ever-changing landscape, and with the right knowledge, you can position yourself to reap the rewards. Before diving headfirst into the world of international investments, it is crucial to establish a solid foundation for decision-making. Just as you wouldn't build a house on shaky ground, your investment portfolio needs to be anchored by carefully considered factors. The first and foremost is economic stability. Look for countries with consistent GDP growth, controlled inflation, and a healthy balance of payments. These are strong indicators of a resilient economy capable of weathering global storms. Next, consider the ease of doing business. A country with transparent regulations, minimal bureaucracy, and strong investor protections will make your life much easier. Tax policies are another crucial element. Some countries offer tax incentives to foreign investors while others impose heavy levies. Understand the tax implications beforehand to avoid any unpleasant surprises. Equally important is the country's political stability. A volatile political environment can jeopardize your investments, so opt for nations with a history of peaceful transitions and a stable government. Finally, delve into the specific investment opportunities offered by a country. Is it a hub for technological innovation? Does it possess vast natural resources? Is its real estate market booming? Identifying areas of potential growth and aligning them with your investment goals is key. Remember, diversification is not just about spreading your money across different countries. It's about diversifying across different asset classes within those countries as well.